Hello and welcome. You're watching BT TV. I'm Tanya Neja and this is Market Today. Well, it's Raksha Bandhan and happy Raksha Bandhan to all the viewers who are celebrating it today. And markets are also in a good mood, and we started off, in the positive territory, and we are still holding on to the gain. 344 points uptick there on Sensex, 65,400 mark. We have crossed that as well, and for Nifty as well, 19,400. We have surpassed that level as well. So 19,442 is the level. 100 points uptick there on Nifty as we speak, and it's the broader markets where all the action is taking place at this point in time. Nifty small cap 100 index, if you see, it's at all-time high. So the action continues, when it comes to the broader markets. In fact, if you see Midcap also, Midcap and small cap stocks, these stocks have been on a roll, and the action continues as we speak. And let's do one thing. Let's pull up some of the gainers for you from today's trading session and see where the action is happening at this point in time. And it's clearly Geo Financial Services, which is the top gainer as we speak, and it is among the top gainers. And Tata Steel, Axis Bank, Cipla, some of the banking counters, some of the pharma stocks, they are doing really well in today's trading session. IT also, there's some action happening there as well. 1% uptick there on HCL Tech. 1171 is the level. Some of the metal counters, by the way, metal index, that is buzzing, and how. And Hindalco is one of the top gainers for you. Ultratech, Adani Enterprises, Eicher Motors, some of the other top gainers for you. And on the flip side, if we look at some of the losers, clearly, it's some of the power companies, some of the oil marketing companies, they're not doing really well. They're not supporting the markets as we speak. BPCL, one of them, 353 is the level where we are at. Dr. Reddy's, some of the, pharma counters as well, not really supporting. SBI, Apollo Hospitals and Coal India, these are some of the other losers as well. But let's do one thing. Let's welcome our guest on the show today and find out where are the markets headed going forward. So Vineet Bolenchkar, he's the head of equity research at Ventura Securities. He's joining us today. Thank you so much, Mr. Bolenchkar, first of all, and happy Raksha Bandhan. It's festive season, and markets are in a great mood today. We are seeing that green uptick on the markets, and we have seen a few trading sessions where this consolidation is happening. It was a really boring market, as some of the experts are saying, but what's really next, and where are the markets headed if we talk about near term or let's say medium term?
So, in the backdrop of concerns of the global inflation spike that is happening, and, meltdown in China. So, it's a known fact that China is melting down. And what is really happening is that, a melting China will actually add to the deflation, isn't it? But what is happening is that the job creation and the supply side constraints are creeping in, which is going to lead to actually an inflation happening because of the supply constraints. And in the US, what we are seeing is that, there is an anticipation built up that the rates will, rise because the inflation is incessant. And there is a sell-off happening in the bond markets, and that money is now being plowed into equities where the asset allocations are going up. So while the popular opinion is that in a recession we would be looking to go down, I think we are in an upcycle which could last for the next couple of months, and I believe that globally the indices will move up. It's possible that the US markets could make a newer high, and in sentiment with that, and India, because of its strong fundamentals, could perform much better. And while we are seeing that the trend has not percolated to the large cap stocks, there are plenty of stocks in the small cap and the mid cap segments which are really doing well. There's a lot of value still remaining. Although the market believes that the rally is overdone, I am of the view that there are significant opportunities in front to look around, and that play will continue to take place as we approach Diwali.
Okay, but Mr. Bolenchkar, if we see, if we look at the broader markets, you know, it's the space where all the action is happening. Even today, if you see Nifty Small Cap 100 Index, it's at record high. Stocks like Rides, Cochin Shipyard, and Suzlon, they continue to outperform. And even if we look at mid cap space as well, Indian Hotels, Steel Authority of India, you know, Billion Food, Emphasis, these are the stocks that are, you know, doing pretty well, and this space has been buzzing of late. And we have seen, you know, tremendous amount of rally when it comes to mid cap and small cap space. So I want to know it from you, that is there more steam left when we talk about, you know, broader markets, or one should book profits at these levels?
No, so I believe that, as I mentioned earlier, that there's a lot of steam, especially in the broader market, and it will continue to play out. So some of the themes which are there, obviously the renewable energy theme is there. We have the defense plays taking place, and obviously joining this is the commodity boom now. So there is the rice stocks which are there, which are already bullish, buzzing because of the ban on exports. We have the metal stocks now creeping in because post this BRICS, the geopolitics of BRICS and G7 and G20, you know, the commodities are going to now get weaponized. And that is going to lead to a sharp rally in metal stocks. And along with that, we are seeing supply constraints coming into China, which is going to actually lead to the chemical space also doing well. And, if the interest rates in the US were to move up sharply, what is going to happen is that the rupee might sell off because there are two pressures. One is the uh, one is the US interest rates going up, and there's a depreciation of the yuan which we have to manage. So if you want to keep your exports competitive, the uh, the the RBI will have to let go of the rupee. And in that bargain, I see that the pharma, the chemical stocks, and the other export oriented units will also start perking up. So overall, a very, very strong market. And if you see, the credit offtake is also being very encouraging. So banks will also be participating. So overall, this is the way how the build-up will happen uh, uh, to the rally as we move forward. The spoil sport in this case can become oil, but China is not buying a lot of oil. So we just saw that they they put out a item which said that their oil they've reached peak oil consumption. So that
Absolutely.
bodes very well for the Indian markets.
Okay, and Mr. Palichka, you mentioned metal and chemical space. So, any stocks that are on your radar, especially if we talk about metals and chemical?
So I think the usual devils are the industries.
Okay,
We like DCM Shriram. I think the
okay.
caustic soda trend is playing out. Tata Chemicals looks very good. So these are some of the chemical stocks that we are currently tracking.
Okay, absolutely. And, you know, let's talk about Zomato as well. The stock is on a roll today. And, this is amid block deal buzz and positive views coming in from, many brokerage firms. So, what are your thoughts when it comes to Zomato? And the stock has actually more than doubled from its 52-week low of 44 rupees. So, I mean, is it a good time now to step in when it comes to Zomato?
So, just recently we initiated, it's not even been 7 days since we initiated on Zomato, then the price was around 94, 95. So, our target on the stock is 155.
Okay.
Uh, so, we believe that over the next 24 months, this stock should do really well. And I'll tell you where my optimism in the thesis comes from. So, we are around 77 crore internet users, and our penetration only 9% vis-a-vis very high levels for China and the US. So even if we consider ourselves to be the pioneers of the digital society, the way we've done leading edge tech that we produce, so this under penetration is a kind of a anomaly compared to the sophistication of our platforms and technology. So I believe that there will be a rapid transformation of our user behavior, and there will be more online ordering opportunities as Zomato and Swiggy see the expand their penetration. We believe that there is a strong trend playing out, and a couple of reasons why we believe that the thing should rally is that, as I told you, the fledgling nature of the business, duopoly between Swiggy and Zomato, which they hold greater than 60% of the food share market share. As I told you, grossly underpenetrated market, humongous online opportunity, and also scarcity premium. So if you look at the three verticals of the company, right, which are their food delivery business, Hyperpure and Blinkit, I think all three combined now will drive a revenue CAGR of about 32%. We expect the company to post a EBITDA positive number this year around 65 to 66 crores and a PAT of about 44 crores. So, the company is completely turning around. And you know what? Over the next 2 years, we believe that this number on the earnings, net earnings, will pole vault to a 1557 crores from this 44 crores number that I'm telling you, on a revenue of about 20,000 plus crores. So we are talking of a margin close to 8% from currently just turning around, and a EBITDA margin, and the PAT margin will almost be the same because they have the benefits of accumulated losses. So you know uh, this stock needs to get re-rated, and as I've told you, what is our target on that?
Okay, that's the verdict coming in on Zomato. And oil marketing companies, these companies are also in focus today, Mr. Balanchkar, and they are trading lower following the government's decision to slash prices of LPG cylinders by 200 rupees per refill. So stocks with the likes of HPCL, IOC, BPCL, they are trading lower, 1% downtick there on BPCL. What are your thoughts on this pack, oil marketing companies?
See, currently the government has a mandate to control inflation, and they have put out a war chest of close to 1 lakh crores, and they're using various levers. So one was obviously to cut the rates on, the energy cost, especially given the elections are there. So we are seeing the 200 buck cut on LPG. Apart from that, the government has taken a number of initiatives towards taxation. But, leaving that aside, I don't think that this knee-jerk reaction to the slash in the prices is warranted. We believe that the entire oil marketing companies are reinvigorating their business models, you know, to become more in tandem with the energy needs of today, that is green energy. And they have a mandate being part of the government's arm, you know, to push that through. So, given this kind of opportunity that is there in front of them, I believe that they make up for very very long term investment themes, and I believe that these stocks, they may not perform immediately, but if you accumulate them over a period of time, you sip into them, you will get some very very handsome returns over a period of 3 to 4 years.
Okay, absolutely. And lastly, Mr. Balinchka, since we all are gearing up for G20 summit, so is there any theme, any sector that is on your radar? Especially if you could benefit. If we talk about G20 summit only, and we could benefit from any sector, any theme that could give any significant returns to our investors.
I don't think I can point out to any particular theme related to G20. But what I believe is that, a probable distant outcome of this could be emphasis on climate change. And that should really pole vault the renewable energy stocks.
Okay. And what about defense sector? Because we have seen, tremendous rally. They have had a dream run, major defense stocks and in fact railway stocks as well. Your thoughts on these two sectors?
I don't think that the party is going to crash anytime soon. Valuations will sustain. However, you need to be really picky and choosy about what you're buying, because you should not be held up owning stocks where the fizz is just not there anymore.
Okay. And since it's all about stock selection only, so any stocks that you are betting on from defense and railway space?
So, in the defense segment, I like Cochin shipyards. I
Okay.
think there's a substantial upside still uh, pending out there. And which of the other sector you said? In the
Railway.
railway space.
Yes.
I think in the railway space, the stocks have run up a bit. I would, there are multiple stocks abound other than the railways, which will give you much better returns. I'm not saying that the railways would do badly, but if you
Okay.
would like to see one stock in that which has got the FI attention is IRFC. You'll be seeing some massive buying coming into that stock, and that can still continue to outperform.
Okay, absolutely. So these are the picks that are coming in. And on that wonderful note, thank you so much, Mr. Bulenchkar, for taking the time out and joining us here on Business Today Television. So with that, it's time for me and my team to wrap up this edition, and markets, continue to perform really well today. They are in the good mood, and it's festive season, of course, and 307 points uptick there on Sensex. 65,388 is the level. Okay, now 65,400 is gone, but 19,400, that is the level that is still intact when it comes to Nifty. 90 points uptick there. So it's time for me to wrap up, but you stay tuned for all the latest market updates, and many thanks for watching.
The latest images of Pragyan rover in the South Polar region of the